Bang. Hello, folks, and welcome back. That was the intro, so that means this is another episode of the Daily Crypto Byte, and today is Thursday, September 9th. Getting a little bit of a bounce back in the markets, so we got plenty to talk about today, some interesting stuff going on. But before we get started, John, CJ, how are you gentlemen doing today?
I'm doing okay. How about you, CJ? You feeling better? All bulled up, or are you?
Yeah. It's nice to see some green. It's very nice to see some green, and I think we'll actually have some doges of the day potentially. I don't know about you, gentlemen, but let's get into it.
Sure.
Yeah, definitely. And to that point about doges of the day, CJ, I noticed Bitcoin dominance retesting that critical level that you were highlighting yesterday. We've been talking a lot about that 40% level. I think today's going to be a critical day. We may find out if the alts are going to be leading the charge or if Bitcoin's going to be leading the charge. So let's dive right into some charts. What do you say?
Yeah, let's do it because aside from just technical analysis, I think that we have a lot of interesting Glassnode data to cover as well. But first, beginning with Bitcoin here, I wanted to highlight something on the 1 hour chart that has to do with volume and the TD sequential indicator. And so we had that massive liquidation that everybody is so fond of course. And that was the selling climax, right? That actually happened on the TD sequential reversal 9. And of course, we didn't reverse directly on that candle, but we reversed shortly afterwards. We have a massive amount of sell volume, but that's also buyer volume taking the other side of that trade with presumably a longer term time preference. Now, the thing that's interesting is that we've had extraordinarily low volume in the hourly chart ever since that capitulation event. And now for the first time, we're actually starting to see some hammer candles and some sufficient volume on the way up on a shorter micro term time frame. So I think that bodes very well for intraday price action. And I think if we go to the daily chart, something that is very interesting and what we see a lot after these capitulation candles is something known as a technical term as an auto rally. So when you have, you can kind of think of it like a spring. When things get so coiled up with seller pressure, seller momentum, generally you have a spring back in the opposite direction, in this case being bullish. And so I think an optimal target for that level in the short term is likely the 50K resistance level from the previous Fibonacci. So I am expecting a little bit of an auto rally back to that level in the short term here in the next couple days, if not even within these current 24 hours. But something that I do want to share in terms of Glassnode data to kind of give a little bit more context to our recent liquidation. This is a chart about the futures and the estimated leverage ratio across all exchanges from Glassnode. And this orange line makes it pretty obvious that all of the futures and the leverage has pretty much been flushed out of the market in terms of those levered longs. We're now below a period of time in August, which was really the start. If we go back to August 9th, August 10th, that was when we were at current price levels of roughly 45 to 46K. So it's very interesting to see that the leverage is actually below that level now. And the same is true for futures open interest, specifically with the perpetuals. We're now below those levels that we were at the beginning of August when we held that 40K support, 45K support level. So I think that bodes well for the trend. And the last one that I want to show here that I think is really the most bullish characteristic from a longer term perspective is large whale wallets. So this green line that we're looking at here is Bitcoin wallets that have more than 1,000 coins in them. And it's really interesting to note this inverse relationship between an increase in the whale wallets and a decrease in price and leverage and open interest. That was all the short-term traders, essentially we could call them weak hands in the market, transferring their Bitcoin to stronger hands with a lot of Bitcoin. So I'm not saying that we're immediately bullish and we have to go, make new all-time highs. I think that there's a likelihood we could retest the lows here if we go into a reaccumulation phase. Nonetheless, I think it's very clear that from this recent capitulation event, we had a transfer of Bitcoin from weak hands to strong hands.
Great points there, CJ. And what's really interesting is historically, this is not the first time this has happened. And I touched on this a little bit yesterday during our member webinar, but I just want to bring up this historical instance of a similar liquidation event. And that occurred on November 26th of 2020. And what's most interesting about this, in my opinion, is taking a look at this chart. The price action preceding the liquidation event is very similar to the price action that preceded the liquidation event earlier this week. We had strong price action, steady price action, not too volatile, and confidence in the market around this point right here was reaching an all-time high. People were looking to new all-time highs as an inevitability, but obviously people had other plans, and this levered long liquidations took place, and we saw another instance of that massive transfer of wealth from the retail traders into those long-term holders. And I think that given the fact that the buildup to this liquidation event in November is so similar to what we're seeing now, we can look to the weeks after that event as kind of an estimation for what we can expect here. And looking at this chart, we get a few days of positive price action before staggering a little bit at the previous all-time high. But as you can see here, ultimately that transfer of wealth was very healthy for the overall trend because it ultimately locked away a ton of Bitcoin that was in the hands of more fickle traders. And from this point, the rest was history. We rallied up to all-time highs, ridiculous levels, and then eventually the retail participation came back in. So this data from Glassnode here is dated from November 26, 2020. And as you can see, this orange line representing the futures long liquidations, this spiked on November 20th, and we saw, or November 26th, and we saw a subsequent drop in price, very similar to what we are seeing today. So just thought that was worth mentioning quickly.
Very interesting. I had one, guys, that I just wanted to discuss because of the SEC apparently sending that Wells notice. In other words, preparing to charge Coinbase with at least an examination. It's not a finding of guilt or anything else, but it is an examination where they, the SEC, and perhaps an overzealous person at the SEC, has decided that it's not right that Coinbase is going to do lending of those tokens and thus paying people, much like virtually every good exchange broker does. Obviously, Voyager does that. And it makes for a fairer market. We've discussed this many times that you will not have a thriving derivatives market if you can't borrow stock, and if you can't borrow Bitcoin or, Ethereum, whatever you want to choose that you'd like to have a derivative on. If you can't borrow, you can't create puts because, it just inhibits the growth of derivatives around any of these assets. And unlike most in the traditional finance space, crypto exchanges and brokers will routinely pay people for leaving that crypto online so that it can be lent out. They don't do that. They don't give you a share of that in 99.9% of brokers. I only know of one out of the hundreds of brokers that I know that actually pays its customers for deposited shares of Apple, for instance, but it could be any security, could be GameStop, could be AMC. If you bought it on margin, they can lend it out, and they routinely do lend it out, but they don't pay you. You don't participate. So the fact that in crypto, they do let you participate in that, and we've described it here many times, that some of the cryptos pay double digits, 11 or 12% for some of the deposited crypto. Bitcoin right now, I think, is between 6 and 8% looking across a broad swath of brokerages and what they're paying. And in the case of Voyager, if you have their VGX token, they juice up how much they'll pay you as well. So I thought it was odd that the SEC charged Coinbase, or at least is ready to charge Coinbase, hasn't charged them yet. And I saw Brian Armstrong, the CEO of Coinbase, tweeting out that he didn't get it either, that he thought they were totally cooperating and he didn't understand. He thought pretty much said that they were blindsided by the SEC. So I reached out to Brian and I asked him, do you think they even have jurisdiction over what you're doing, Brian? And the reason I offer that, folks, is there's two OCCs. There's one OCC that's the Option Clearing Corp, OCC, and then there's the Office of the Controller of the Currency, OCC. So it's kind of confusing. The one I'm talking about is the Controller of the Currency. Now, the Controller of the Currency, it seems, might have some say as to any of these crypto exchanges that they can actually reach out and grab, like a domestic, like Coinbase, that they might have something to say. The SEC, the only thing that I could figure out that the SEC would have at all on Coinbase would be that if there was something nefarious or not right with the trading of their stock, because that's what the SEC is charged with. To my knowledge, the SEC has not approved any ETFs for cryptocurrencies, and thus they don't have any jurisdiction over any such thing. So it'd be the Office of the Controller of the Currency, or perhaps the CFTC, which does govern the CME and others as far as domestic exchanges that trade futures and or derivatives of these cryptocurrencies, because that's the CFTC, the Commodity Future Trading Commission's purview. So I don't really get what's going on. I know I've gone on long-winded on this, but I don't understand why Gary Gensler, who's a really smart guy and likes crypto, I don't understand why he's going after Coinbase in this way. And I'm not sure that he's really on strong ground. I spoke to two lawyers about it yesterday. Neither one thought the SEC really could do anything except, they can send a Wells notice to anybody. And they could say, we're going to be investigating you. Here's your opportunity to talk to us before we file any formal charges. That's what a Wells notice basically is. If that's all they're doing is fishing, okay. Can they actually regulate what Coinbase does in terms of crypto lending? Again, Office Controller of the Currency, perhaps. CFTC, perhaps. SEC, I don't get it. And I'll stop with that.
Great points there, John. And I was actually going to ask you about that. So I'm glad you took the time to talk about that, because it is really, really important. And yeah, as Chris points out, Dr. Liquidator dropping some truth bombs today. Always love to hear it. Thank you for that. And one thing, John, I thought was really interesting about that whole thing is, like you pointed out, other exchanges and brokerages offer this sort of interest on held assets. But it was so interesting to see that tweet thread from Brian Armstrong. He basically reached out to the SEC as kind of a courtesy, and they told him, nope, don't do that. That's a security. Like, we'll come after you if you do that. So just very weird how they operate. And I agree with you. It doesn't seem clear exactly what the extent of their jurisdiction is. So interesting stuff for sure.
For sure.
Go ahead.
By the way, one last thing before we get to the doges of the day. Solana. Oh my God. Up over 200 now. Just days ago, the three of us were talking and showing how from the time of Lollapalooza, it was $60 token. Now it's up over $201. Well, it's just dipped, but it was just over $200 per token. Amazing run by Solana, and all-time highs here and just pumping.
Solid technicals, solid fundamentals, and technology. I think the key differentiator for that kind of price action is institutional participation, because a lot of retail crypto assets don't see that. But I think that Solana is one of those exceptions that is seeing institutional participation. But Monty,
yeah, absolutely.
Thoughts?
No, I just a lot of people have been asking, like, should I take profit on my soul? And CJ, I know you're a fan of The Simpsons like myself. There's an episode where Homer sells his soul to the devil for a donut. Now Don't sell your soul, people. Do not sell your soul. The devil will not deliver. This thing is going up. Like CJ said, the institutional adoption is just insane and really bolstering the value of this project. But the entire ecosystem is performing well. And I guess I will use that as a transition into my Doge of the day here, because my Doge of the day today is Band Protocol, which is a part of the Solana ecosystem.
Finally, it happens. You take my Doge.
Yes.
That's the first time
yes.
that's happened.
Gosh,
you were due.
I was due, and I took the liberty of going first today because in the back of my head, I knew that was a possibility, CJ. So that is my Doge of the day today, Band. And I'm very reassured that CJ was also looking at this one now. But as you can see here, we're getting some nice positive price action, taking us back above this 20-period smooth moving average. Watch the volume today. It's already looking strong. But I think if we can eclipse the amount of volume we saw here on September 6th, that would bode very well for the trend overall and would perhaps allow us to continue this trend and continue putting in a lower high right here around $13. So overall, I mean, if you take a look at the ecosystem, like Jon just pointed out, I mean, obviously Solana's ripping, SRM performing incredibly well. I do expect that speculation to come downstream into Band Protocol, and it looks like that's already happening here. So Band Protocol, fundamentally bullish, technically looking strong today, so I have chosen it as my Doge of the day.
Well, if I have to go, I'm going to go with Uni. Both Uni and Polkadot looked pretty interesting, but as usual, I am waiting for a trigger with volume, and I don't have it yet. So I don't know that Uni doesn't retest some of these lows, which were like $22. Right now it's 24, but on the 6th, it was $30. So am I being a pig holding out for 22 to see if we bounce there? If we were seeing a build in volume right now, I would jump into Uni right here at 24. But I'm not seeing the surge in volume yet. I saw a big amount of volume on the downside, and I'm waiting for, we're basically on the 6th when we pumped up to 30, the volume, 24-hour volume was about 581 million. Right now, it is a little bit higher than that, but on the sell-off, guys, it was up around 1.5 billion. So that's triple where it was when we pumped up. That's how many people were panicking on the way down. I'm still thinking I might get a chance to get Uni closer to 22 than 24 with a target of, again, back into that 29-30 range.
I think Uni in the DeFi ecosystem is in a very interesting state because it's either undervalued because of the NFT market being very popular and raising gas fees on the Ethereum network, ultimately depressing the prices of assets like Aave, Comp, Maker, and Uni. So it'll be interesting to see how they bounce back. But I think Uni is a really good target for it because it is the primary DEX on Ethereum currently. Despite the fact that Monty had chose Band, I do want to throw out another asset because we are seeing some quality volume in OMG. The relative the relative trading volume for that one is up over 160%. And so if we look at OMG technically, we are on a T sequential 9. However, that 9 is not occurring at the top of the trend. The 6 candle actually occurred at the peak of the trend. And so that means we're probably likely for continuation, at least in the next day or two, if Bitcoin is to truly fulfill this auto rally. But still seeing some quality volume, and I think we could definitely see a new high in OMG as well. But with that being said, I'll pass it back to you guys to wrap it up.
Remember, you can join these two guys and avail yourself of an awful lot of experience from them and the thousands of traders that are in the crypto room by going to Market Rebellion /try crypto, just Market Rebellion and then the /try crypto. And you can join CJ, Monty, their team, as well as literally thousands of active crypto traders and investors. Costs you just $1 to join. And then if you like it, it's just over $1 a day after that first month. But the first month, it's $1. So make sure you go check it out. marketrebellion.com/try crypto.
Absolutely. We'd love to have you. And if you're looking for a brokerage to get started trading crypto, head over to investvoyager.com. They offer some of the most competitive interest rates in the business, up to 10% on your USDC, 12% on assets like DOT. Really, really good stuff. And if you do head over there, use code REBEL25 for $25 free in Bitcoin when you sign up. So that's all we got for today. Thank you guys so much for watching. And as always, we'll be back tomorrow with another episode of the Daily Crypto Byte. Have a great rest of your day, and we'll see you tomorrow. Take care.
Thank you.